Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning, traders. Sorry about the delay. It is 7:49 a.m. Chicago time. This is episode number 2723. It is Wednesday, the 10th of December. Let's just get right into it here with the Convergent Trading pre-market summary sheet. A quick reminder, the FOMC rate decision comes out at 2 o'clock today. The market is mainly expecting a cut of 25 basis points. Let's pull up the Fed Watch tool here and take a look at what the market is pricing in through the Fed fund rate futures. If you don't know about these, they're pretty important. Here it goes. So this is a CME product. And you can see that the current rate is 375 to 400 basis points, and the market's pricing in almost 90% probability of a cut by 25 basis points. So if they don't do that, things might get moving pretty quick. So that's where we are. If you look at how this thing has shifted over time, basically a month ago we were less confident, but since then it's kind of popped into 90% and it's been holding steady there. The decision is coming without input from the CPI to the public, as well as non-farm payrolls and GDP. So it's something where I think participants are likely to get caught off guard here, and we're likely to see a pretty decent reaction in either direction, really. Other than that, you could see that most of the index kind of structure is unchanged. Really, these numbers represent very, very little change for those products. Basically, less than a rotation. You can see the S&P is actually unchanged against its prior settle. We're still dealing with about, coming into the open here, we're still dealing with about 60% to 65% of RN and RVol across the U.S. index complex. The DAX is off pretty good this morning. Still, volumes and ranges have been coming in. We're seeing close-to-close volatility dropping pretty dramatically over the last few days. So we're coming into the end of the year here, and things are getting quieter and quieter. Again, we see silver and copper moving around pretty good, and we're seeing cryptos holding steady. This morning, the S&P has a multi-distribution profile. It's got about 3 distributions almost. The volume is 123,500 contracts, pretty much in line with what we would expect. The mode is 130,000 by the time 8:30 Central rolls around, which is the open, and the range is really pretty much in line. 25% inventory's flat, so we're coming into basically a very, very balanced market yet again. Not much more to talk about here. Of course, you can always access your own calendar, and you can always access this sheet, which is published on Twitter/X. You can go there at x.com/conv trading. The appropriate links are at the bottom of the sheet here in the gray box. You might want to just check those out, and of course bookmark them and so on. Follow, like, subscribe, all that good stuff to stay informed. But overall, that's what we have. I'm going to jump right into what was expected yesterday for the S&P in the recap segment here. Let's enlarge this. This is basically yesterday's video. So this is directly out of YouTube. You can watch this, of course. And what I talked about yesterday is we're pushing up against this this band between 68.40 and 68.45, which we held overnight. And I said if we hold that, I expect a little bit of a relapse up, but not much range. If we don't, then I expect this thing to tumble into 68.10, into the 68.10 area. That was the main expectation. The primary scenario really for yesterday was we would probably sit sideways between 68, 40, 44-ish, all the way back up to around 68, 70-ish. Okay, that's scenario one as you see it here. Here's what actually happened. Boop. So let's go right into our market profile chart to see what's going on. And you could see, as I'm sure you could see already in your own charts, that it kind of sat sideways. So we did end up holding that 68.44 area. We could not take out the overnight low, and we sat sideways. So here it is, 68.72. You know, we're looking for about 68.68, 68.70, and 68.44, and that's pretty much exactly what it did. Pretty balanced profile. We have a bit of an excess on the close, but really not much to talk about here today. We do have a bit of a ledge. You can see there are two letters sitting next to each other. Bit of a ledge at the high. We did take out the overnight high, which looked weak to me. So yesterday was pretty much run-of-the-mill kind of trading day. And then since then, in the overnight session, we have dipped a little bit. Crude has actually fallen off, and we'll talk about that in a minute more violently. But the ES is holding steady. This region in the ES has a lot of volume in it. So if we pull in everything from about the 26th of November, you will see here, you know, this range. I'm pulling in whatever I need so I can draw this profile, which is based on everything you see on the screen at the time. You could see a nice taper at the top. This is kind of the big picture. A very clear excess low from this day that got retested. Here, and a lot of fat in the middle. And that's where that, if you watch yesterday's video, I talk about this quite a bit, where, you know, this is where we get this idea that we're probably, the first scenario is probably going to be that we are stuck here. And that's basically what happened. So as we are trading currently, we're at 68.48. So we haven't actually migrated away from this zone. And we're holding kind of steady. Yes, we tested below in the overnight session, but look at what we've done. We've tested far enough below that we found buyers down in this area, right underneath the low of 2 days ago, the 68.35 and a quarter. We went to 34 and a quarter, so we took it out by 2 ticks and came right back into basically where these 2 points of control overlap on the profile. So today, coming into today, I'm really looking at this the same way as I looked at yesterday, which is hold steady, be disciplined. You're not likely to get much opportunity. So here's the chart that we create the scenarios on, and you could see more prominently that profile and how fat it is right in the middle. This is acceptance. The market's tendency is towards acceptance. That's the market's primary job, is not to run your stops, not to be a stop hunter, not to be the algo secret society or whatever. That's all just conspiracy theories, and it helps sell stuff. But really, the market's looking for equilibrium, and we have equilibrium where we are today. On top of that, we have the FOMC. So don't get too adventurous today. It makes no sense for me to put up scenarios on the screen. My recommendation to you today is to go for a walk. Go do something else until the FOMC takes place, and then we hear what the latest and greatest is from the committee and from Fed Powell is in the news conference. Really, other than that, you're just basically rolling the dice and trading against short-term traders. Big money is probably going to make an adjustment at the open. We're stuck between these two red bands in the 68.40 to 68.80 range, and we're likely to stay here. If we get directional to the downside, then I'm looking for 68.12 to 68.02 for the retest there. That band has been there for some time, but overall, really not expecting much until the FOMC comes in, and then that may get so volatile that any scenario I draw on here is really a moot point. So I'm not going to do that. Crude, on the other hand, this thing is just absolutely moving now. So, as I outlined yesterday, we were in a very large downward sloping channel, and then we formed a short-term upward sloping channel right here. So you had this channel over here, and it kind of traded pretty well through it. Wow, look at that upper line. Isn't that perfect? I drew a perfect line for once. And then we broke through last Friday. We tested back up right here. And then since then, it's, that was Monday. It drove down. It put in some single prints. It was not able to pull back to fill those in during the session. And then yesterday, same thing. It opened, had a very, very weak attempt into the prior range and pushed down and put in single prints down here as well. And it's just looking pretty weak. And if you recall yesterday, I talked about 58.20 being the primary target to the downside. And then below here, we're really looking at 57.10 down here. Test the extreme. Remember, the market likes to check who is still there and then come back to balance. And so we're left with this hump right here. And once it clears it to the downside, you're looking at the low before it stabilizes. So overall, what's forming here is a resumption of this downward channel in crude. It's looking pretty bearish. The cancellation of that is not actually to break the one-time framing down, which has triggered as of yesterday, but actually a return and hold of this high distribution at 59.25. Other than that, it's likely to be kind of leaning to the bearish side overall. Okay. Again, crude, no sense in putting up scenarios. Just be conservative today. Setups are very likely to show up. Convergent. In the accelerator course, we show out of balance market setups as well as balanced market setups, and they have a tendency to show up. Just be very discerning and very disciplined about which ones you'll take. It's better to keep your powder dry and wait for the FOMC to pass so that the market can really pick a direction after it flops around a little bit. So my recommendation to you today is just take it easy. Don't have high expectations. Let things play out a little bit and show themselves before you dive in and kind of stick your neck out. Okay? That's the best I can leave you with. Good luck today. Again, pay attention at 2 o'clock Eastern, 1 Central for the announcement. And then from there, how it closes is going to be a very telling sign. It's going to give us a lot to talk about tomorrow. Okay? Don't forget to subscribe to the channel. It's free. And hit the like button for the video so others can find it. Good luck.